Welcome on board the top brass from Wipro, Srini Pallia, the CEO, Aparna Iyer, CFO, and Saurabh Govil, the CHRO, joining in on the show right now. Srini, hi, morning, and good morning to all of you, firstly. But if Srini, I could start off with you. Despite a slight decline in the US dollar revenue, how do you plan to address the challenges in growing revenue, especially given the Q1 FY26 guidance, which is indicating a further potential decline?
If you look at our numbers, especially for the financial year FY25, and if you look at overall as a Wipro, we have degrown. Having said that, if you look at Americas, which contributes to almost 63% of our revenues, it has grown 1.2%. Also, APMEA, which has degrown for us this year, the last quarter, they have actually shown a sequential growth. I think our challenge right now has been Europe. The good news about Europe is that we got a new team, and we have won a large deal, which we'll start ramping up sooner. And we also have a very strong pipeline on the back of this large deal win. We want to make sure that we win these deals that are there in the pipeline. So in that, the guidance that we are given is in the context of these three aspects as well.
Right. Aparna, with your IT service margins holding steady at 17.5%, your PAT exceeding expectations, tell me what financial strategies are you implementing to maintain, or for that matter, even improve profitability amidst all these revenue pressures?
So thank you for that. Indeed, we have been improving our operating margins through the last 8 quarters quite consistently. And that has been possible because of excellence in operational rigor that we are bringing in, the excellence in execution. And if you just look at the kind of productivity that we've been driving in our fixed price programs, our acquired entities have been improving their margins consistently. We've been rationalizing non-client facing roles in high cost countries. We've been optimizing our overheads. So it's been a very, very collective effort that kind of reflects in the margin performance that we've delivered. It is challenging to continue to sustain these margins given the weaker revenue environment and the fact that a large part of our pipeline is actually constituted of cost takeout deals and vendor consolidation. That does put substantial pressure on the margins. I think we will have to continue to go ahead and flex the levers that I spoke about even more. We have dropped our utilization a bit compared to where we were 3 or 4 quarters ago. So that again becomes a lever that we will be closely monitoring, especially given our revenue guidance. So those will be the levers. We have to go back and use more and more AI in our fixed price program for productivity, and that will be a lever for us.
Sure. Aparna, but tell me about the currency fluctuations and how they impacted your numbers, and what measures are you taking to mitigate this risk?
So currency has been a positive in this quarter. The rupee did depreciate against the dollar, but there were also crosses that moved on the other side. So rupee depreciation offset by the movement in crosses has actually been a favorable impact to margins during the quarter. As we look ahead, currency continues to be very volatile. We have a very strong risk management framework, which has continued to help us during these kind of volatile movements. We stay on course with that policy, and I'm pretty confident that we will continue that our hedging strategy will reduce the volatility of such movements.
Right. Srini, the silver lining is the large deal bookings, which are showing a significant growth, an uptick of almost 83% on a sequential basis. Tell me, what strategies are you putting in place to ensure that these translate into long-term revenue for you?
Absolutely. I think we are coming out of 2 mega deal wins this financial year. Overall, large deal bookings have grown significantly, like you said. And this also reflects on the fact that we have a large deal engine within Wipro, and we can actually scale and scope these kind of large deals. Having said that, it's also important. Some of these deals take their own time in terms of the ramp up. For example, the large deal Phoenix, it's going to take us some, few more months before we actually ramp up, where the revenue will, start kicking on for us in terms of the quarterly performance. Also, most of the deals that we are right now looking at, they are a lot more on the cost side rather than the business transformation side. So we are also, those could be deals that if we book this quarter, maybe we can realize the revenue much faster, because the client is also looking to optimize their cost as quickly as possible. So it's a balance between the two. And the last but not the least, if you look at the business transformation deals, I think the clients are taking a little bit more time because they want some level of certainty in terms of how this macroeconomic environment is going to continue going forward. So if there's a stability in that aspect, I think the clients will start spending on that, and those also are opportunities for us to go after.
Sure. So tell me more, Srini, about these two deal wins that you had and what kind of potential they hold.
At this point in time, from a deal perspective, we have the confidentiality agreement with our clients, so I can't disclose too much of details about this particular deal, and whatever you've seen and heard, and we have made a press release as well on that particular deal. But the point is, this particular deal that I'm talking about, it's going to take a few more months for us to ramp up, because there's a lot of work that we got to do before we actually start execution. This is something that we're having the conversation with the client, and this is also the part of the solution and the approach how we want to take this deal. So to me, that aspect of the deal I'll not be able to disclose. Second, if I look at the pipeline that we have today, I think it's a very robust pipeline, whether it's look at Americas or Europe or in APMEA. What is more important is what kind of deals are we shaping, how are we shaping these deals, and depending on that, how quickly can you realize the revenue benefits kicking into next quarter and quarters ahead. I think that's where we are staying focused on.
Right. Srini, reports are suggesting that you're planning for these global capability centers or GCCs as well, and a service line via bot model. Tell me a little bit more about that. What exactly is the plan here, and what's the potential?
Global capability centers have been strategic to Wipro, and I've been talking about it last 4 quarters. Second, this also helps us build a strategic partnership with our clients, because one is the clients are doing the BOT model, but once even if the transfer happens, the client wants to partner with us, because they want us to be their extension of the GCC, if you will. So to me, they want to leverage the scale and scope of work that we do in terms of skilling our people, the capabilities where we are built around industry and cross-industry solutions that a GCC can quickly benefit from. So, and also the innovation network that we have created. So to me, GCC is not new. GCC has been there for a very long time, and we have a few many GCC clients, in fact, for many, many years as partnerships, and we work with them jointly here in India as well as in other parts of the world.
Aparna, given your financial performance and the kind of market conditions that we are in, uncertain at that, tell me, what are your priorities for capital allocation and investment in the coming quarters?
In January of this year, we revised our capital allocation policy to say that we will return 70% or more of the cumulative net income over a block of 3 years. And we remain committed to that. As a first step towards increasing the capital allocation, we have substantially increased the dividend payout that we completed. In January, we gave a dividend of $800 million in value terms, which was an INR 6 rupees per share, which is quite significant compared to the dividend history of what Wipro has been giving out earlier. So we are sitting on a $6.4 billion of cash, and we are committed to seeing the most efficient way of returning that back to our shareholders after keeping enough for our investments.
Saurabh, I do notice that attrition stands at about 15% versus 15.3%. Tell me, what levels are you targeting for Q1?
We would like to maintain where we are. Very, very clearly, we just need to stay focused on what we need to do. I think, I repeat myself, we have opportunities opportunities to upskill, deploy, and grow our people, and we will maximize that in the coming quarter.
Srini, lastly, given the Q1 guidance of a potential revenue decline, tell me what key strategic initiatives are you undertaking to drive growth and kind of counteract this trend?
Sure. So one is we will continue to stay focused on the 5 strategic priorities we called out, which is our focus on large accounts in our priority sectors and markets. 2, we said we'll continue to build on large deals, and we talked about that. 3, we're going to build industry and cross-industry solutions which are consulting and AI powered. We'll continue on that journey. We have good success in the last few quarters. Talent, you talked about it, Saurabh talked about it, right? That's something that we have to upskill because Gen AI continues to change. We need to have more and more of our employees move on to advanced training programs and certification programs on Gen AI. And also they have to have the industry and the process context as we do it. And the last one is client centricity. We had a very good third-party survey that happened, and our NPS scores, CSAT scores have improved, and we have to continue to stay focused on that. So those are the 5 things that we will do. But here and now, we got a sense and response to the clients as they are doing a scenario planning, because it varies from sector to sector. For example, consumer and manufacturing, within manufacturing, automotive and industrial have had a much bigger impact. So they are really looking at how to save cost and save cash. But if you look at sectors like BFSI, they're waiting and watching before they want to do the new discretionary spend. So to me, we have to continue to stay focused on clients and sense and respond to their needs and be very proactive with them.
Okay, good luck with that. Thanks all of you for joining in, Aparna, Saurabh, as well as Sri.